Hey traders, I'm Steve and welcome to Jackrabbit Trader. Today we're going to talk about the 10 tips that you need to know when trading the stock market that help keep you profitable and in sync with the market itself. If this is your first time here and you want to learn how to profit from the stock market with a simple, easy to follow trading process, then you've come to the right place. We're putting out new videos every week, so be sure to subscribe and hit the notification bell so you don't miss anything. And of course, if you enjoy the content, remember to smash that like button. With that said, let's get started. All right, so over the years, I've learned that the stock market is not there to make you happy. All right, if you don't go about it with any type of process or strategy, it'll chew you up, spit you out, and you're just going to end up being frustrated, angry, and lose money daily, and end up being part of the 90% of people that cannot trade the stock market or fail in trading the stock market. And that's just not the case, right? The other 10% of the people don't have any special abilities to see the future. It's just the way they manage their emotions, the way they manage their process. And those are probably the 10% of people that actually have some type of trading strategy to get them through the markets and navigate the markets. So what I've done is I've put together what I consider to be the top 10 tips that you should know when you're starting to trade the stock market to help get you started. And these are the 10 tips that I think everybody should know. And some of them may seem very obvious, and others may be a little bit of a different view on things. But these are the kind of I keep these on my trading software and just as a refresher, right? So if you're having a difficult time or you're just starting out, maybe this is a way to refocus and get you back on track. So here are the 10 tips that I have for trading the stock market. Number one, ignore the headlines. Okay, headlines are so difficult. You cannot have any type of actionable information from any type of the headlines. All right, so here we're looking at CNBC. Now, this may be the first time that CNBC has ever been up on my computer. It doesn't come up on my phone. I don't go to it. I don't look at news. I don't even bother because I can't trade off of it, right? So that's number one. Ignore the headlines. And if we look, here we have investing in the strange negative yield world. All right, so everybody, the talk now is negative yields, and this is going to trigger a recession, and markets are going down. But then look here, the lows are in and markets are headed higher. All right, very possible. All right, we've put this out in my Jackrabbit report that I put out every Sunday. Last weekend's it basically said the same thing. Maybe the lows are in, but we also define the highs. All right, so it's a little different. We're not trying to predict. We're just understanding where the market is in its range. So if you want to get on that Jackrabbit report, head on over to jackrabbittrader.com/newsletter and sign up. It's completely free. Anyway, all right, so the lows are in, markets are headed higher, hard to invest. What else we got on here? All right. Here are some of the stocks making the biggest moves. Walmart shines light on Elon Musk's Solar City deal, new lawsuit. All right. Can't trade any of it. Okay. The only thing that you can get from this is complete confusion. One guy says it's going down. Here Dow falls 170 points. All right, complete confusion. So the reason I completely ignore headlines, number one, is I cannot trade off them. There's not going to be a headline that comes out that ever says to me, Steve, it's time to get out of your trade. When I see that, then I'll change my tune. But you're never going to see that. All right, so it's going to be everybody's opinions, not based on real world information or real price information. All right, and that brings me to my second, focus on price. All right, so ignore the headlines and focus on price, because price is actually a tradable thing. All right, here is a trade that I made in CDNS. We talked about this a couple weeks ago. All right, it's very simple. I have no idea what this company does, perfectly honest. I trade the pattern. Here we go. We have a consolidation, a breakout. All right, and that breakout tells me all I need to know. It tells me that buyers, whoever they are outweighing sellers. And for whatever reason, it could be that they announced earnings. It could be that they invented some machinery. It could be that they cured some disease. I don't even know what they do. whatever, it doesn't matter. But the people that actually know, and the traders and the market movers that move markets, feel that the stock is going higher because it's breaking out. And the sellers have now been exhausted, and the buyers are outweighing sellers. I got all that information from one little bar on a chart. All right? There was no headline. There was no alert that came out to me that said, Steve, time to buy this because they invented, the next best Iron Man suit, whatever it is. All right? And all we did is trade it, and we made money, and we got out. Okay? So ignore the headlines. Focus on price. Don't overcomplicate technical analysis. All right? Number 3. All right? How many times? Let's see what we got in here. All right? We'll just amuse myself for a minute. Let's go to, I don't know, let's pick something. Whatever. That was the worst one I could have picked. All right, so what are the normal ones, right? MACD, RSI. Let's see, what else? Usually, like there's a moving average, like 1,000 things, not the 2 lines, but the ribbon. That's what it's called, the ribbon. Let's see, ribbon. Here, ribbon study. Moving average ribbon. All right, here we go. Oh, there we go. Now I know how to trade the markets, right? Look at all this information I have. Now I have everything that I possibly need. All right? I couldn't even tell you what I'm looking at. All right? I might as well be flying a spaceship at this point because this, to me, is the most confusing and anxiety-driven screen that I've ever seen on my trading platform. All right, and I'm not saying I used to never do this. Don't get me wrong. Many years ago, I used to try and find everything, right? The MACD, the RSI, but the MACD is saying this, the RSI is saying this, but all these ribbons, they're changing from yellow to red, and that's not good. So what's going on? Don't overcomplicate it, okay? Just focus on the price. The price leads the indicator. The indicator is a lagging indicator, all right? It does not predict. It only reflects price action. Okay, so if you could focus on price, I gotta get this off. I'm sorry, it's got to go away. Remove all these. Give me back. All right, if you focus only on price action, all right, again, everything is in the chart. So that those indicators that we have on, whatever they do, whatever they stand for, they're lagging the price. Price to me trumps everything. And if you can clean up your screen, focus very cleanly on charts. Look at this is what I look at. I swear. This is it. It's price. And the only other thing that I will say that I look at, is this. This is my only other thing, and these are indicator lines that I've drawn based on what I consider to be market cycles. Again, I go over that more in my free trading course called The Weekly Process. You can get that again, jackrabbittrader.com/weekly process. Also leave a link in the description box below, but that'll go over everything here. But that's it. I have 2 moving averages. That's the extent. That's all I got, I swear. All right. And again, we just focus on price, and you can see here that I've basically identified price levels that I am trading within. And actually today, for my beta members, I was able to alert them to buy some puts early in the morning, thinking that the market was going to go lower. If you watch my video from 2 weeks ago, you'll know my timing sucks. I apologize, but we're in the right trade, at least at this point, whatever it is. And that goes into my next point or tip. Develop your process, okay? I'm here. This process was not learned overnight, okay? This process that I use to trade was developed over at least 3 years, all right? And it took me a couple mentors to really hone it and really focus. And whenever I tried to match somebody else's process, I couldn't do it. I was not as successful as my own. All right, so I trade the weekly charts. This is how I trade them. I want to give you the framework to my process, but I don't want you to trade my process, right? I want it to be your process, that you take maybe portions of this process that I use and maybe somebody else uses this, and you take and you mold them together and you develop your process, because only that process is going to find you the success that you want. All right, you're not going to find success for my process. All right, as much as I can literally spell out the trades that I'm making and why I'm making them, and getting to the point where we have some consistent profits in, and I'll show you exactly what we're talking about here. Here is my trading process and my account for the year. 69 winners, 7 losers, and we're up 14,000. So that's my process. That's what helps me. But I can give you every single one of those trades, and if you can't get around your process, and what do you do when the market starts to go down? What do you do when the market's overbought? What do you do when the market's oversold? How do you define those? All right, I can spoon feed you trades all day long, but if you don't know how to use them and how to actually trade when I'm not there, then it's not going to work. So number 5, all right, know where you're wrong before you get in. So again, let's just stick on the CDNS, and this was my trade. All right, I bought this breakout. Where was I wrong? Where do I want to get out if to cut my losses? Well, for me, and the way my process dictates, is it's at the lows of the consolidation. In this scenario, it was $40.66, which was the lows right in here. So I know where I want to get. So I'm not worried about how much I'm going to make, right? That's the wrong attitude. That's the wrong way to go about this, because I could take this trade and say, oh, I want to make $10,000 on this trade, and I'm going to put my entire account in it. All right, and then the market just goes down, and now I lost my account, and I blew up my account. All right, so that's not the way we're going to trade. All right, you want to know where you're wrong. Let that dictate. The profits will take care of themselves. If you can figure out the ins and outs of the mind, and how you want to be, when and how you want to enter and exit trades, that's the easy part. All right, it's knowing what happens when all of a sudden all my positions are red on a green day. What happens when, the president tweets something and the market crashes 1,000 points in 20 minutes? What do I do? What do I do? And that's where you got to get to. So, you know where you're wrong before you get in. All right, manage the risk portion first before you worry about the reward. All right, and with that, bet small. All right, don't swing for the fences. Look at these real quick. Sorry, I'm looking around my microphone. But look at these winners here that I have. All right, and I trade around the SPY. Here's a big loser in E-Trade, but here, all right, you got O'Reilly, $230, CHD, $164, DRI, $248, Microsoft, $178, DHR, $96. Right? They're not big wins. They're small. Look at the percentage: 4, 5, 6%. Not giant wins. I'm not swinging for home runs here. So I'm betting small to make a small amount of money, and I'm making it consistently. All right. And again, going back to that example we just talked about, I'm betting small. I'm not putting my entire portfolio. I am doing 0.5% of risk on my portfolio in every single trade. So for argument's sake, if I have a $100,000 portfolio, I am risking $500. That's all I'm risking, $500. All right, I'm not risking $2,000. I'm not risking $3,000. I'm not risking $5,000. $500. All right, bet small, and that allows you to be more consistent and just let the trade work without the emotional baggage associated with it. All right, accept your losses. All right, let's look at E-Trade. All right, I got knocked out of this one. All right, I took my loss. That's all I can do. I can't do much else. All right, and what happens is if you don't take the loss will get bigger and bigger and bigger. Like look at here on E-Trade. Say this was let's take the trades off for a minute. Style, show trades. All right, let's say that this was my exit point. All right, right there, that bar that broke down. All right, and I said, you know what? It's gonna come back. Don't worry. And here we go. That was at 55. All right, and then went all the way to 41. $14 more. So were you risk? If that's where your stop was, so be it. But now, don't hope and pray that the trade's going to come back. Take your loss, move on. It's just a vehicle, a means to the end. That's all it is. All right. This is not the next Google. It's not the next Amazon. It's not going to make you rich overnight. It's a trade. It's a way. It's an employee that is paying you, and when they stop working, you want to get rid of them. All right. So accept your loss. Cut your loss and move on. Take profits consistently. All right, let's look at let me think, Disney. All right, and this is a trade. Let's go back, put my trades on. All right, so here, we're looking at just taking consistent profits. I bought some stock, I bought a little more stock, market turned around, I sold some stock. All right, what was the other ones that we just talked about? Oh, O'Reilly, right? Here we go. So bought some stock, and look, we talk about, again, support and resistance. A couple weeks ago, we talked about, the support and resistance on the weekly and those prominent levels. Well, here we are again. All right, you come up, you hit resistance, you come up, you hit resistance, down to support, resistance, okay? But again, just taking small profits, taking them consistently, and when I have profits and the market's not going in my direction, then I want to take them even quicker. All right, so we talk about all that. That's part of the market cycles. I even have a video, which I'll link in the description below, about my market cycles. You can look at that. But that brings me to my next point. All right, evaluate market conditions, and that's that chart that we talked about earlier, where I evaluate market cycles. All right, and for me, anytime that we're below the 21-day exponential moving average, we're in a red market cycle. And when we're in a red market cycle, I want to be taking as much risk off the table as I possibly can, and or hedging my portfolio. All right, I'm not at that point looking for the market or my trades to go up astronomically, because the conditions are not right. So if you can evaluate the market conditions and trade in accordance with those conditions, in line with those conditions, in sync with those conditions, it's huge. Okay, and that's one of the things that we talked about. Stay in sync with the market. Trade to the long side when the market is going up. All right, protect and hedge, and maybe take some small trades when the market's going down. All right, because you're not in an environment that you're not. I'm sorry, but you're not the greatest stock trader to ever live. You are not going to find that diamond in a rough that goes up when the market goes down. All right, it's not going to happen. If you do, you got lucky. So, realistically, understand market conditions. That's why I have this chart. I look at it every weekend with members in my portfolio reviews, in my Jackrabbit report. Again, we talked about that. So here we are, right? 293 is a level on the high side. The resistance, 282 on the bottom. All right, and until we're out of that, we're in a range as far as I'm concerned. But we're also below the 21-day. So now, in my opinion, market's trending lower. It's below the 21-day. We have some room to the downside to this 282. We took a quick trade. We are taking a quick trade. I'm currently in SPY puts, looking for it to get back to that 282. And that's the way I trade in these red market cycles. Green market cycles, when we're above the 21-day moving average, all right, different. We're at risk. We're going to put stocks on. We want to get it long as quickly as we can. We want to manage those positions accordingly. All right, but you have to be in sync with the market and what the market's doing before you can go ahead and become profitable. And last but not least, one of the most important ones that I can think of is focus on yourself. Right? You can't. There was so many times, especially when I was learning. Even now, every once in a while, I'll see on Twitter somebody made $100,000 on a trade, or somebody made $50,000 this month, or whatever it works out to be, and I made 3 or 4 or 500. Okay, everybody starts somewhere. So focus on yourself. Focus on developing that process. Focus on developing yourself as a trader and mentally, the mental side of it, and you're going to find yourself in a lot better spot at the end. Okay, because social media is one thing, but at the end of the day, if you're trying to make a living and be consistent in trading the stock market, you really got to have your shit together. As much as I can say it, and you got to know what you're doing, and you got to be able to flip on a dime, and really protect yourself when you need to protect yourself, and push it when you really have the wind at your back. So if you could focus on yourself and get yourself ready for that type of process and that type of trading, then you'll be all right. All right, so those are the 10 tips. All right, if you can train yourself for these 10 tips and really, really dive into them and eat them up and absorb them, you'll find you're more in sync with the market, and you'll be able to act from a position of strength instead of weakness, where you're hoping the market's going to come back and make you whole, right? There should be no hoping in this situation and in this game. You gotta just do it for you and focus on yourself and move forward. So next week we're going to look at maybe some more technical analysis. We're going to start diving into some of the technical analysis that I use, moving averages, candlesticks, that kind of thing. We're going to focus on that, and we'll continue with these overview videos as well. So be sure to subscribe, click that notification bell if you haven't already. And again, if you enjoyed the content, smash that like button, leave a comment below, and we'll see you on the next one. All right, take care, guys.